Yo, what's up, my people? How y'all doing? Y'all know it's your boy Devin B representing Black Diamond FX. And here is video number one in the series that I am doing for all you new traders that want to learn how to trade. All right. So this is video number one. Today we're going to be talking about candlestick anatomy. All right. Now I'm going to try to keep these videos as short and to the point as possible. All right. But before we do anything else, I need you guys hit that subscribe button, hit that thumbs up button, share this with about 10 million of your friends, put it on your Instagram, put it on your TikTok, your Facebook, your whatever social media platforms you use. Share this, show your boy some love. You know what I'm saying? Trying to build up my subscribers, build my brand and teach you guys at the same time. All right. Plus, on top of that, if you guys are looking for some in-depth training and want to join my community, click on the link in the description, join my WAP, holla at you, boy. All right. So today, candlestick anatomy. All right. Video number one. There are two types of candlesticks that we use, or two types of candlesticks that you see on this chart right here. Now, you see mine. Let me erase this right quick. This was my setup from earlier. Didn't quite tap in. This was my target up here. Didn't quite hit my target either. But I mean, it's whatever. All right. But we have two types of candlesticks. All right. We have bullish candlesticks and we have bearish candlesticks. All right. Let me do this right quick. Let me do this right quick because I have to show this to you guys. Pull up my whiteboard. Let's take a look at candlestick anatomy. Right here. All right, here we go. All right. So understanding the candlestick. So there's two types of candles, right? You have a bear candle. Those are your down close candles. Okay. And you have a bull candles. Those are your up close candles. And I'm going to explain to you guys a little bit more what that means. All right. So when you first pull up your chart on TradingView, matter of fact, once this video is over with, go to tradingview.com. If you don't have a TradingView account, it's totally free. Go ahead, sign up, get your TradingView account. All right. So when you first pull up your TradingView, first pull up your first chart, you're going to see these red and these green candlesticks, right? The red candles are your bear candles. The green candles are your bull candles. All right. So what that means is a bear candle signifies price going down. All right. A bull candle signifies price going up. Okay. So say for instance, we're on let's say a 15-minute time frame. All right. There's a timer that starts for every candle. On a 15-minute time frame, every candle lasts for 15 minutes. All right. If you're on a 1 hour, every candle lasts for 1 hour. If you're on a 30-day, every candle lasts for 30 days. Whatever time frame you're on, your candle will last for that amount of time. All right. And what happens is, say we're on the 15-minute, right? And that 15-minute timer starts. You're going to have what's called the open. The open is the start of your candle. All right. So you're going to have your bear candle. The open is the start. All right. Now, what determines whether the candle is a bear candle or a bull candle is where the candle closes. If the candle opens at 15 minutes and then right at zero, because it's going to count down, the timer is going to count down from 15 minutes to zero. If at zero, price is below where it opened, came down, of course, that's going to give you a bear candle or a down close candle. All right. If at 15 minutes, the candle opens here, down at the bottom, down here. And at zero, price is above where it opened. That's your bull candle. All right. Price goes down. Bear candle shows price coming down. Bull candles show price coming up. All right. Now, the anatomy of your candles. Of course, the open is where it starts, close is where it finishes. You also have the upper wicks. The upper wicks signify the highest that price went within whatever time frame you're on. Once again, if we're on a 15-minute time frame, that upper wick shows the highest that price went in that 15-minute time frame. All right. On the reversal side of that, the lower wick shows the lowest that price went within that 15-minute time frame. All right. Then in the middle, you have the meat and potatoes, which is the body. All right. This is the body. This is where the most important. This is where price the price levels, the area of the candle between the open and close. All right. I call this the meat and potatoes because this is where most of your trading goes on within the candle, inside of the body. All right. That's the meat. That's the potatoes. That's the rice. If you got some gravy, they got some gravy up in there. Even the dessert. You understand what I'm saying? That is the body of the candle. All right. So what we're going to do now, we're going to go to my chart. Now, my chart is going to look a little bit different because I like my stuff black and white. So instead of being red, my down close bear candles are white. Instead of being green, my bullish or up close candles are black. All right. I understand that. All right. Let's take a look. Now, so you see these candles. Remember, my black candles are my up close or bull candles. All right. So if we look at this candle here, let me make the screen a little bit bigger. All right. So if we look at this candle, you can see this candle opened here. All right. And we're on the 1 hour time frame. That means at the start of the hour, this candle closed. Look, see over here to the left, to the right? See right there? That's your timer counting down. The current candle is right here. So far, all right, so look, the top part up here, this is where that candle, let me mark it right quick. Mark it with a line, horizontal line. Hold up, cross, boom. All right, right there, that yellow line, that's where that candle opened. Now watch. See where it's at now? We got 7 seconds. 6, 5, 4, 3, 2, 1, 0. That's a bearish candle. Look where the next candle opened at, right where this one closed. So now we have an open. So far, it's a bearish candle. All right. Depending on where. We got 59. We got a whole hour left before this candle closes. If this candle closes above, it's going to be black above this open right here. All right. And look at, see how close up, look, open next to it, close up, open next to it, close down, open next to it. See how that works? Now, sometimes on these platforms, you're going to have little gaps in between them. All right. Those gaps can signify one of two things. Because this is a platform and it kind of like price, the market moves so fast, it's going to create a gap in between the time price is actually moving and the time it actually registers on this platform. All right. Like it has to be like super, super fast to really keep up with price. But for the most part, it's close enough. There are also other times when it's going to have gaps in between the close of one candle and the opening of the next candle. That is going to be caused by actual trading volume. All right. And we're going to discuss that in one of our later sessions. But for the most part, these are your bull candles. These are your down candles. And that is how they form. If you like this video, please hit that thumbs up, hit that subscribe button. Holla at you a little bit later. All right. Y'all have a great one.